Hey everyone. Ready to unpack a topic that's kind of like everywhere, but we don't always get it?
I hear what you mean.
We're talking money and banking today.
Right.
And our guide for this deep dive is a YouTube video
Okay.
called Five Things About Money That Banks Don't Want You to Know.
Mm.
It's by Proactive Thinker. I think that title alone tells you we're in for an interesting ride.
It does grab your attention, doesn't it? It's pretty provocative,
Yeah.
but I think there are some genuinely interesting points raised in the video.
Yeah, definitely. Like right off the bat, it says that most money isn't even like real, that it doesn't physically exist. But I mean, I can hold a dollar bill in my hand, so how can that not be real?
Yeah, I can see how that sounds kind of strange. But the video dives into this concept called fractional reserve banking. And that's how most money is actually created.
Okay, fractional reserve banking. I'm all ears.
So like, imagine you deposit, let's say $100 into your bank account.
Okay.
The bank is required to keep a small fraction, that maybe like 10 bucks, as reserves.
Mm.
But they can lend out the other $90 to someone else.
Wait, so that $90 that they just loaned out, is that still like my money?
Well, it's still technically part of your account balance,
Right.
but it's also being used by somebody else at the same time.
Whoa, that's wild. So my $100 is like in two places at once.
Exactly.
Mm.
And then that person who borrowed the $90 might deposit that money into another bank.
Okay.
And that bank can then lend out a portion of that deposit as well.
So the money just keeps multiplying.
In a way, yeah. The original $100 has now kind of multiplied within the system.
It's kind of like magic, but with money, I guess.
In a way, yeah. Most of it only exists as digital records in bank computers, but it's impacting the real economy.
Okay, my mind is officially blown. So if banks can just keep creating money like this through loans, doesn't that create a massive amount of debt? I mean, where does it all end?
That's a key point the video brings up.
Okay.
The system where money is essentially created through debt kind of traps us in a cycle where we can never fully repay the total amount that's owed.
Wow. And the video even throws in some pretty intense quotes about this from Andrew Jackson and Henry Ford.
Right, they were pretty vocal about their concerns.
Like, they basically said if more people understood this system, there would be like a revolution. Strong words.
Yeah, they were definitely worried about the implications of this system. But beyond the strong reactions, it highlights why it's so important to understand how money works.
I'm with you on that. This deep dive is all about gaining that knowledge. Okay, so we've established that most money is debt. But now I'm curious about who controls all this debt money creation.
Well, that brings us to the big kahuna, the Federal Reserve, or as it's often called, the Fed.
Ah, the Fed. Always shrouded in mystery. Like, who are these people and what are they really up to? The video makes it sound like some shadowy organization pulling the strings behind the scenes.
The video definitely plays up that angle. But let's look at the reality.
Okay.
The Fed was created back in 1913 after a huge financial panic.
Right, I remember learning about that in history class. Panic of 1907, I think.
That's the one. So the Fed was supposed to be this stabilizing force for the economy.
Makes sense.
And it's actually not a single entity. It's structured as a system of 12 regional banks.
12 banks. So it's kind of like a decentralized network.
Yeah, you could say that. And get this, each of these regional banks is actually owned by its member banks.
Wait, what? Banks own the Fed. So all this talk about a shadowy organization, is that just his conspiracy theory?
Well, it's not that straightforward. While banks do own shares in their respective regional Fed banks, they don't control the Fed's policies directly.
Okay.
The Fed is overseen by a board of governors. These are people who are appointed by the president and confirmed by the Senate.
Ah, so there are checks and balances. It's not like the banks just get to call all the shots, right?
Right. It's more nuanced than that. But the ownership structure does raise some questions about potential conflicts of interest.
Okay, I can see how that would be a concern. The banks have a vested interest in how the Fed manages the money supply.
Exactly. And the video really hits on those concerns. It suggests that this structure might give large banks too much influence over monetary policy.
Which, of course, directly impacts their profits. So how do we reconcile these two sides? On the one hand, the Fed is supposed to act in the best interest of the whole economy.
Right.
But on the other hand, it's partly owned by these institutions that, well, let's be honest, their main goal is to make money.
Yeah, that's a tension that's been debated for a long time.
No easy answers, I guess.
Not really. The video doesn't offer a definitive solution, and honestly, there might not be one.
So what are we supposed to do? Just accept that this is how the system works and hope for the best?
Not necessarily. The video's point is to encourage critical thinking, to question whether there's a need for more transparency and accountability.
That's a good point. We need to be informed citizens. Okay, so we've talked about the nature of money, this whole fractional reserve thing, and we've started to unpack the Fed. But what does all this mean for me? I'm just an average person trying to figure out how to manage my money and make ends meet. What's the takeaway here?
Well, this is where the video starts to get really practical. It challenges this idea that your bank is like your financial best friend, always looking out for your best interests.
Wait, you're telling me I can't trust those friendly faces at my local bank? My whole world is crumbling.
I know, it's like finding out the tooth fairy isn't real. But while the people at your bank might be friendly, banks are ultimately businesses.
Okay.
Their primary goal is to generate profits for their shareholders.
Profits over people, right?
Not necessarily, but it's important to remember that banks have their own priorities. So while they offer services that can be helpful, you shouldn't assume that they're always going to give you the best advice or the best deal.
So I need to be more careful.
Exactly. The video really encourages viewers to be more proactive, to shop around, compare offers from different banks,
Okay.
and maybe even consider alternative financial institutions like credit union.
Credit unions, okay.
Yeah.
I'll have to look into those. So basically, I can't just blindly trust my bank.
Not blindly, no. Always be wary of products or services that might benefit the bank more than they benefit you.
Gotcha. Be informed, be aware. This is good advice. All right, so we've shattered the illusion of banks as benevolent financial guardians. But the video doesn't stop there. It goes on to talk about how the wealthy often get preferential treatment in the system.
Right, and that's where some of the ethical implications come in.
Okay, so if I walk into a bank with $1 million in my account, I'm going to get a better deal than someone who's just starting out. Is that what we're saying?
Let's just say banks,
Hmm.
like any business, they tend to cater to their most profitable customers.
Makes sense, I guess.
And wealthier individuals and businesses, they represent more potential revenue. So yeah, they do often receive preferential treatment. Better interest rates, lower fees, access to exclusive services.
It feels kind of unfair, though. Doesn't that just make the rich richer and everyone else struggles to keep up?
That's a valid concern.
Yeah, it's like the system is rigged against the average person.
The video definitely touches on those concerns. It challenges viewers to think about the systemic issues that contribute to economic inequality.
So what's the solution?
That's the big question, and it's a tough one to answer. Some people argue for stricter regulations to make sure that banks are lending fairly. Others advocate for programs that can help people with limited resources access affordable credit. It's a complex issue with no easy solutions.
Sounds like it's going to take a lot more than just awareness to fix this problem.
Definitely. It requires a combination of individual action, responsible policymaking, and a collective effort to create a more equitable system.
Wow, okay. So we've gone from the nature of money itself to the inner workings of the Federal Reserve to the not-so-rosy reality of how banks operate. I'm starting to rethink my whole relationship with my bank.
That's the power of knowledge, right? It can change your perspective. But before you swear off banks altogether, remember that they still play an important role in the economy.
That's a good point. We need them, but we need to understand their limitations. So where do we go from here? What are some practical steps we can take to navigate this complex financial world?
Well, that's what we'll delve into in the next part of our deep dive. We're going to look at some strategies for taking control of your finances and making the system work for you.
I'm ready for that.
Welcome back.
All right, I'm ready for more.
Good, because this video gets even more practical in this part.
Perfect, because after that first part, I need some practical advice. It's kind of like, whoa, the system's a little more complicated than I thought.
Yeah, it can be a lot to take in. But knowledge is power, right? The more you know, the better decisions you can make.
Absolutely. So what's the first step? How do I become more, savvy about my finances and especially my interactions with banks?
Well, the video really stresses being proactive. Don't just accept whatever your bank offers or assume they're giving you the best possible deal.
No more blindly trusting.
Exactly. Shop around. See what different banks offer.
Okay.
Maybe even check out credit unions.
Credit unions, okay.
They often have better rates and a more personal touch because they're member-owned.
Interesting. Okay, I'll add that to my to-do list. But can we circle back to the Federal Reserve for a second?
Sure.
You mentioned earlier that the Fed, even though it's partly owned by banks, is ultimately accountable to the public. How does that work?
Good question. So the Fed has this dual mandate.
Dual mandate.
Yeah, they have to promote stable prices and maximum employment. Basically, keep inflation under control and make sure people have jobs.
Right, makes sense. But how did those two things go together?
Well, it's a balancing act. Their decisions on interest rates affect borrowing costs for everyone. So they can stimulate the economy or try to cool things down if inflation gets too high.
So it's a pretty big responsibility.
Definitely.
Huh.
But the question of who watches the watchers, who holds the Fed accountable, that's a little more complex.
Yeah. How do we, the people, have a say in all of this?
The Fed is designed to operate with a high degree of independence.
Independence.
Yeah, Congress oversees them, but they don't answer directly to the government or any single political party.
So it's not as simple as voting for someone who promises lower interest rates.
Nope, it's not that simple.
Yeah.
It's to prevent the Fed from making short-sighted decisions based on political pressure.
I can see why that's important, but it also makes the Fed seem kind of untouchable, like this mysterious force controlling our financial lives.
Right, and that's where the video connects this back to inequality.
Ah, right. We were talking about how wealthier people get deals from banks. How does that tie into the Fed?
Well, let's take mortgages as an example.
Yeah.
Imagine two people applying for a mortgage. One has a great credit score, lots of assets, a stable income. The other has a lower credit score, not as many assets, income's less predictable.
Okay, so the first person's less risky for the bank.
Exactly. Less risk means they qualify for lower interest rates. So they end up paying less over the life of the loan. Could be thousands of dollars difference.
Wow. So the person who already has less ends up paying more.
It's a real concern,
Oh.
and it feeds into that larger issue of systemic inequality.
So how do we make the system fairer?
Big question. No easy answers.
Mm-hmm.
Some people say we need stricter rules for lending practices, make sure everyone's treated fairly.
Mm-hmm.
Others say we need programs to help people access affordable credit, regardless of their background.
Sounds like we need a bunch of different solutions to tackle a problem this big.
Absolutely. It's going to take a combination of individual effort, smart policies, and a collective push for a more inclusive system.
Okay, so we've talked about the Fed and the ethical challenges and how to be more aware of these systems, but there's one big piece we haven't gotten to yet. What about investing?
Ah, yes, the old put your money in the bank and watch it grow idea.
Exactly. But the video makes the point that maybe that's not the best advice anymore, especially with interest rates being so low.
Right. It's almost like banks are just a place to park your money now, not really make it grow.
So what are the alternatives? Where do we go to make our money work harder for us?
Well, hold on to your hats, because in the next part, we're going to dive into some alternative investments and strategies for taking control of your financial future.
Oh, I am ready for this. Okay, so we've gone deep into the system, learned some stuff that maybe made us a little uncomfortable, but now I'm ready for the good part. What do we do about all of this?
Well, that's where this video really shines, because it actually gives us some solutions, like alternative ways to think about building wealth.
Lay it on me. I'm ready for the secrets.
Okay, so remember how we were talking about how banks might be more like a parking lot for your money than an investment?
Yeah?
Well, the video suggests maybe we should think about actually investing in bank stocks.
Whoa. Okay. Instead of just being a customer, I become an owner. Kind of like flipping the script.
Exactly. You become part of the system, potentially benefit from its profits. But of course, there are other options too, beyond just banks.
Tell me more.
Well, the video talks about real estate, for example.
Okay.
That's a tangible asset. It can appreciate in value over time.
Right. Makes sense. What else?
It also mentions precious metals.
Like gold and silver.
Exactly. Those are often seen as safe havens, especially when the economy is uncertain.
Okay, so we're talking about diversifying, not putting all our eggs in one basket.
That's the idea. And the video even brings up cryptocurrencies.
Oh yeah, crypto. It's kind of the Wild West of finance, right?
It is. But it just shows that there are all these options out there. You don't have to rely on traditional banks for everything.
I'm getting the feeling that the biggest takeaway here is to educate myself.
You got it. The video really hammers home this idea of ongoing financial education.
So I don't have to become like a financial expert overnight.
No, but it's about developing that mindset of always learning, always staying curious.
So even if I don't have a fancy degree in finance, I can still make smart choices.
Exactly. There's so much information out there these days. Books, websites, even podcasts like this one,
True.
And if you need more personalized